Welcome back, everyone. We are ready for the next panel discussion of the Vested Summit 2021, the investment edition. I want to remind you that this is live, so you can leave your questions in the comments section and interact with our speakers. They're very happy to take your questions. So please get involved. Now we have a panel on VCs versus syndicated funds. In this panel, we have Lola Fernandez Flores. She's an investment associate at Venture Souq. Mohamed Okasha, managing partner at DisrupTech Ventures. Hasan Haider, managing partner at Plus VC. And Qusai AlSaif, CEO and managing director of Sadu Capital. And to lead the conversation, we have Scale-Up Ventures partner in business development, Walid Guindy. Take it away, Walid.
Thank you so much. Thank you so much, Melody. Hello, guys, and welcome back to our panel today, talking about the VC and the syndicate funds. And I'm really honored and grateful to have a great panelist today. And really would like actually to start our discussion by first off having a brief intro about our actually panelists before we go into deep. So Hasan, please start.
Sure. My name is Hasan. I'm the managing partner at Plus VC. We're a seed stage fund that invests in startups across the Middle East and North Africa. I've been doing this for a little while. I think I'm coming up to year 12 of my experience in the MENA VC industry. But yeah, it's a pleasure to be here. Thank you so much.
Perfect. Thank you so much. Thank you so much. Mohamed Okasha, go ahead, please.
Thank you, Walid. Happy to be there as well. I'm Mohamed Okasha. I'm the managing partner of DisrupTech Fund. DisrupTech Ventures is an early stage fintech focused fund that invests in early stage startups in Egypt. Before that, I was the co-founder and managing director of Favro, one of the fintech startups as well that exited in 2019 in the stock exchange.
Perfect. Qusai, please go ahead.
Thank you, Walid. It is a great pleasure to be with you and the audience. My name is Qusai aleSaif. I'm the CEO and managing director of Sadu Capital. Sadu is a VC firm based in Riyadh, Saudi Arabia, and we're investing of our early stage fund, a fund that invests in Saudi, Egypt, Jordan, and UAE, and we've allocated 10% opportunistically to the region. We're sector agnostic. We have a bigger appetite for B2B company from this early stage fund, and we invest in seed, pre-seed, and Series A. Additionally, also I'm the CEO of the VCP Association in Saudi Arabia, and that is an entity designed to improve the VC and PE environment and investment scene in Saudi and greater in MENA. We believe that whatever influenced Saudi Arabia also influenced MENA in general.
Super. Great. Lola, please go ahead.
Hi, everyone. Very excited to be here. My name is Lola, and I'm an investment associate at Venture Souq. We are a VC based in Dubai, investing in early stage technologies across the world. We actually started as an angel syndicate in 2013. And we recently announced our 50 million fintech fund, investing in early stage fintech across the region. And we also have a conscious investor fellowship that we organize with NYU and KAUST to also educate angels across the region in what conscious tech means.
Perfect. That's amazing. Thank you so much, guys, for the intro. And now let's go ahead directly to our questions here today. Now, the VC, the venture capital, and the syndicated funds, and we're actually just heard that, there is actually big funds like 50 million are actually allocated within syndicate funds. So let me ask first, Hasan, if I'm in a startup and I wanted to raise funds, what's better for me? It's really hard. Because we're seeing startups who are actually in different stages and looking for funds. So how the difference between the VC and the syndicate funds can help the ecosystem boost the funding and the investment scene, and how this actually will impact the startups in the future?
Sure. I think the key difference between sort of syndicated funds and investments versus VCs is as a VC, we have to fundraise all at once, and then we have a stated mandate, and we have to invest according to that mandate. With a syndicated fund, it's not the case, right? You're sort of raising each time there's a deal, and so you can do lots of different things because there's no single mandate for whatever you're raising, and each amount that you raise is based on the strength of that deal. So the value of syndicates and stuff like that comes at probably two different stages within the life cycle of the business. I think when you're a super early stage startup, there's not a lot of funding that's available at seed and sort of pre-seed stage in the region. And that's a pretty interesting place for syndicates to play a role. So, you know, if you can cobble together a couple $100,000 through an angel syndicate that'll come in and at the early stages of your business and get you started, I think that's a really interesting part for the syndicates to really play. And then the second gap that's in the market really within the VCs is at the later stages. So once you've raised the Series A and you're getting towards your Series B or Series C, there's a lot less funding that's available that can plug in that gap. And so a syndicate that can raise from family offices, from strategic investors and stuff at the later stage to get you a significant check of $10, $20 million at the later stages, that's also of value. So I think, you know, there's a lot of funding that's come onto the market recently at Series A level, and so there, I think the competition started to heat up a little bit, unfortunately. But at the early stages, syndicates definitely have a very strong role to play, and we've seen it over and over again with angel groups, with sort of things that have been established to support sort of early stage investment, and then syndicates at later stages where it's more private equity style, family offices and things. There's definitely a role for them to play because there's a gap in the market, honestly, at that stage as well. That's sort of where I envision, where I see that there is a huge amount of opportunity for startups to raise from syndicates, not just from VC funds.
Perfect. Thank you so much. We would like actually to welcome Mr. Mohamed Al Fardan. Hello, Mr. Mohamed.
مرحبا أستاذي مرحبا.
مرحبا. We actually just started the panel and we were done with the introduction. So could you please have a small intro about yourself?
Thank you very much for having me today, and thank you very much for the invitation. I very much appreciate that. I am Mohamed Al Fardan. I am a serial entrepreneur, basically focusing on technology startups and technology ventures. I come from technology background, where I started my career with IBM and then Lexmark after they spun off from IBM. During the IBM days, I had the opportunity to go to the boarding college of IBM in the UK. And I worked for IBM in many countries around the world. During the IBM days, there was a tough competition from a company at that time called Arthur Andersen in the consulting arena. So IBM decided to create a consulting arm to compete with Andersen Consulting at that time. And I was assigned as well for that consulting company. IBM was trying to acquire a company called Bachman at that time in Boston, New England in Boston. And I worked for them 11 months as part of my training. When Bill Gates decided no more remote management for the Arab world, I was assigned to open the first Microsoft office, which was in Bahrain, back in 2003. 2004, at the end of the year, I left Microsoft and I joined a German company called Software AG, which was established in the Middle East, but they were not managing, or they were not able to do or achieve their objectives. So I joined them, I recreated the business, I relaunched the business. And at the end of 2007, I took different direction, where I started the first venture capital as such in the Arab world, I guess. In November 2007, there was no legislation for venture capitals. Startups were a buzzword, everybody was talking about startups, but it was not a real industry, or it was not real business for anybody. It was people who maybe an employee here or an employee there who have some spare time and wants to play a little bit here and there. So they used to create what they call it startup at that time. Although there was many startups in the Arab world. When I was with Microsoft, for example, there was a company from Jordan, in fact, which was acquired by Microsoft, and Microsoft paid $350 million at that time, which was a huge amount of money to acquire that company. But nobody heard about it. In 2008, Yahoo as well acquired a company in Jordan again, and they paid around $120 million, and nobody heard about them. But what took the whole industry by storm, I think, the acquisition of Hero from Germany, when they acquired Talabat in particular, which was again Jordanian company, but then by the time it was acquired, it was more like a Kuwaiti company, because the Kuwaiti young man, sort of took over the company, invested a little bit, managed the business.
This story, Mr. Mohammed, I mean, this story, I think we'll actually go into deep about those stories. I don't want to actually.
So this is in a brief what I do and what I have been doing.
Perfect. Welcome on board. We're really actually happy to have you today. And following our thread regarding the question, and the main topic of our panel is the difference between the VC and the syndicate funds, and how this actually will help the investment scene. I would like to ask Lola here. So now we have knew that, I mean, VCs are having actually mandates, and I mean, they're actually having a strategy of investment. Now, what about the syndicate funds? Because recently we have seen a lot of network angels and syndicate funds are actually popping up in the market. So what are the strategies of their investments, and what their actually mandates?
Yeah, and I think that's an excellent question. I think that syndicates are also having their own investment thesis, right? Either if it's like investor driven, or a lot of syndicates are appearing that are operator driven, right? Like experienced operators that just wants to support early stage startups. We have one of our latest syndicates that is called Conscious Collective, which its own theme is to invest in early stage technology companies that are working towards a social or environmental problem globally. And I don't see if anything, it makes the mission of the syndicate a lot more clear, both to communicate with startups and to communicate with the market, to have a mission and a theme of investment for the syndicate.
Nice, great. So we're actually seeing an impact syndicate funds, right? Great. Now, Okasha, I would like you to know more about I would like actually to know more about the how the VC is actually assessing the market and seeing opportunities, and how it's actually taking the decision of the exit and entry from a VC point of view. So how they actually see, okay, I will actually invest in that market. What are the metrics? What are the criterias? How they see their investment opportunities and appetite in the market here, the emerging markets in general, and how they take their decisions in general?
Okay, it's a big question, so let me try to answer at least part of it. So Basically, a VC, as was mentioned by my colleagues here, is usually are created with a thesis and mandate. I mean, you want to invest in this market and in this sector, sometimes multiple sectors, multiple markets, but you have to define a strategy because, I mean, the market is too big to be addressed in general. So you have to be focused on what are your targets. This is number one. Number two, I mean, when you're looking at, let me talk about markets, you usually look for a favorable conditions, either macro or macro factors that encourage investment. So I'll take Egypt an example because I come from Egypt. When you see that the number of smartphone penetration, how young is the population in Egypt, how much is the government and the regulators are favoring investments and supporting investment in tech, you see this is a great opportunity. And when you see some success stories in Africa, Favro being one of them, this is encouraging, and this is saying that this is here is an opportunity. So as a VC fund, you would be focused on such a market. In terms of the other investment criteria, of course, you have to be active in the market that you are focusing on, very engaged, very plugged in the ecosystem as much as you can, so you can know what's happening and being selective about the opportunities. Of course, the normal thing, I mean, usually you bet on a company, startups in early stage because of the team is what makes things work. Comes next the business model at the size of opportunity. In terms of when to enter and when to exit, I think when you choose to enter, you are looking usually at a certain stake, at a certain valuation, and most of the fees has a range. I mean, I want to invest at this stage with this stake. They cannot be less than this percentage. This is sort of the general direction. In terms of exit, this is one of the big questions in our region, although that there is a lot of money coming in the region, in Middle East, specifically Africa and Egypt in the middle of that. But the number of exits that we have seen in the region is still under the number that everybody is wishing for. I mean, there isn't much of exit happening. And that is making some frustrations to the angel investments and syndicated funds because they come very early with a very small stake and their exit is a bit limited. So, but generally you exit when you achieve a reasonable multiple of investment, when you think that this is the right time for you, not necessarily because the company, khalas, it ended their journey or there is no much of upside, but if you achieve your target as a VC, you're happy with this investment, you go out and someone else from a private equity, growth funds and others will take the lead and also make a decent return on the next phase. I hope I answered the question as much as I can.
Thank you so much. Yes, thank you so much. Now, Qusai, I would like actually to know more about the deals that could be happening between the VCs and syndicate funds. So, I mean, are we seeing? Can we see actually? I mean, big tickets closed hybrid between VCs and syndicate funds, whether in the near future or it's happening already? And how do you see this can actually impact the startup scene?
Thank you. We already seen few deals that have co-investment from syndicate funds and typical VC funds. When I was part of Riyadh Capital, we co-invested with Venture Souq at multiple transactions. It was a great success for both entities and for the underlying portfolio companies. Venture Souq now has their typical VC fund, and other syndicate funds will in the future, and there will be more syndicate funds in the region. I think it's a methodology, or for us in MENA, I think there is huge need for multiple players at different stages with different investment vehicles, and that need will not gonna be fulfilled by typical VCs, by only syndicates. We're gonna see more and more creativity and innovation in terms of investment and financing. We've seen the Sequoia new model of a public fund that invests in multiple funds. That is a new to the world of VC. And hopefully MENA one day will share innovation as we enable part of the role that we do in the VCP Association is to lobby for regulations to be easier and more flexible for us as VCs to create more opportunities and create more investment products. As we see more maturity in the region, you will see VC funds buying stakes of earlier VC and angels and many others. You will see funds buying from other funds and taking the companies forward and forward. This is a model we see in deeper economies like the US and UK, where you would believe a company reached the ultimate growth story and then someone else will buy it and take it even further. Sometimes we'll have distressed assets where companies had been hoped to be a success story, and then that company, God forbid, fails, and we don't lose hope on it. And one of the investors will create a distressed asset, will buy that company, fix it up, change the C-level, and maybe relist it or exit it to a greater entity. This level of creativity will continue to happen in MENA with the help of my colleagues, the panelists, and many others. So I'm very excited to a new horizon for MENA.
Perfect. Thank you so much, Qusai. I mean, you're giving us some great hope. I mean, hopefully all the startups who are actually listening to us, guys, you can see, I mean, we're having the Avengers of VCs and syndicates, and there is a lot of money. And maybe this is will actually take me to the next question to Mr. Mohammed Al-Fardan, being one of the serial entrepreneurs. How do you see, I mean, now it's the funds are actually more accessible. Now, what do you see we need to do more to, I mean, to have more accessibility for funds, whether VCs or syndicates, to the startups, and whether on a regulatory basis or ecosystem base? What can we do more to bridge the gap between funds and startups, and maybe actually do more of matchmaking to cut a long story short, and to actually help startups growth journey faster?
This is very complicated question, Walid, and I don't know if somebody can summarize it during this short session, but I will try. And my opinion is very, very honest and maybe very bold. I hope you don't mind.
Sure.
In my view, until now, we don't really have a true venture capital in the region here. I don't know if my colleagues will agree with me or disagree with me. You know, with all the buzzwords you hear and you read everywhere, with all the news you read everywhere, with all the marketing and whatever you call it here and there, still we don't have a true venture capital in this part of the world. Now, even they invited a number of venture capitals to come from Europe or from US or from Far East. Still, we don't have the true venture capital, number one. Still, we don't have the full legislation which is required for a venture capital. Now, venture capital needs different legislations. When I opened the first venture capital back in 2007, we went through some tough time. We raised the capital, we got the money, and we got the company registered, we got everything. And guess what? We got even the license from the central bank. But the license from central bank was not a venture capital license. It was an investment firm category A or category 1 license, which doesn't match what the venture capital is all about and what the venture capital is trying to do. And there is a difference between a venture capital or an investment bank, as you call it, or an investment company. It is a different ball game altogether. Now, one of the points mentioned by our guest today was the exit for the venture capital. Now, the exit is one of the major and important criteria for any venture capital. The venture capital will take more risk, obviously. and will make, through one or two exits, will make enough money to cover all the losses they would have made in a batch of investments. And this is back to the comment from Mr. Okasha when he was talking about maybe we don't have enough exits for the venture capitals, or maybe we don't have enough venture capitals, or maybe the question, we don't have enough investments in startups to have healthy exits and healthy situations. Is a different cycle and different circle altogether. A true venture capital will require a number of startups. And I tell you, honestly speaking, for any normal venture capital, maybe to be very conservative, 70% of the investments of a venture capitals will be a failure. Maybe 30%, if they are lucky, it will be a success. And the 30% will cover all the losses of the 70%. If in the normal scenario it's less than 30%, but still that's enough for a venture capital to make money and to exit and have a healthy and strong exit. Now, when you talk about the way banks work, banks are structured differently, where they look at it as a loan or whatever you call it. So when you have a fund, it's a different. Maybe now today everybody is calling himself a fund in the region, or maybe everywhere, I don't know. But specifically in the region, everybody is talking about a fund. But when a startup try to reach the fund and get the investment from the fund, no. For example, if they require 3 months, 3 years statement, audited statements, and you must be profitable in the 3 years. And
Mohammed, I'm not sure that your information is up to date. Yani today, I don't know about Bahrain, but I'll talk about
Saudi.
Saudi.
I'll come to you in Saudi. I'm talking in general.
Yeah, even in Bahrain, I think there's been a shift since 2007 to date. There has been a very big change in the way that people look at venture capital as an asset class and the way that we invest it. It is very much in line with the global standards of venture capital. Sure, we don't have enough funding in the region, and we definitely don't have enough exits, but it has become more along the lines of the global standards. We are investing very early in safe notes, very risky assets, startups that don't have anything at all, that maybe an idea they've been working on for 3 months. That's sort of the stage that we invest in, and Qusai is invested at that stage. And I'm sure the deals that I've seen from Okasha as well are very early deals. So I think that the evolution of the market has gone very quickly in the past 2-3 years. We've seen probably 30 new funds launched in the last 2 years in terms of Saudi, in terms of Egypt, in terms of a lot of markets. And the ecosystem has evolved quite significantly, I think. Qusai, if you want to add a bit to that, that would be great.
Definitely, I will talk on a few points. In terms of regulation today in the GCC.
If I can just comment on Hasan's point, please. Now, as far as legislation is concerned, how did it evolve in Bahrain now?
So legislation, so where it comes to legislation, I think that's the point that we're all very well aware of. In terms of VC funds itself, there isn't really legislation across the region, but what we've seen is there's a comfort from investor in investing in traditional GP/LP structures outside the region. So most of the funds.
Do we have the legislation for a venture capital?
Yes, I believe we do. I'll talk in depth about this. Today we have 2-3 economics. Sure. No, not in Saudi. I'll talk about the region. Even Bahrain is very advanced in general, but today we have 2 economic zones in the region, IFC and ADGM. Both of them have structuring and entities for VCs. You could apply for a VC license easily. That's from the region. In Saudi, and no, I'll take us even backwards. Let's go to the US. If you go to the largest market for venture capital on earth, the US does not have a license for VC. You cannot apply for a VC license. It's an activity exempt from licensing. And unless you're managing public funds, you have to apply to get a license, just like any public entity or public funds, managing public funds. So in the US, the largest market, they don't have it, and everyone is exempt. In Saudi, Bahrain, Kuwait, Egypt, etc., you apply to create a management company. That management company should have the requirement of an investment firm. And I think that's very decent. We don't need the goal is not to have a license that is called VC or venture capital licensing. I'll take us away from the venture capital establishment thing. I'll talk about the region. Today, this year marked the highest number of investments, quantity and quality. The number of deals this year is largest than any year in history, in the history of the region. The amounts invested in MENA this year is double. At least I remember the Saudi numbers, but I guess the region, the UAE, Egypt is even more competitive. Saudi had 100% growth rate. That is unprecedented in any asset class in the region. I'm very optimistic for a reason. I'm not optimistic because I want to be optimistic. I'm optimistic based on fundamentals that we've seen on the ground. Today, we represent majority of the region. We're firms investing in across the region. We've never seen as sophisticated as the entrepreneurs that we've seen today. This week and the week after marks a major milestone in the region. Jahez got listed or will get listed in the secondary market in Saudi. This is the first tech listing in Saudi and I guess in MENA. Typical scalable tech startup get listed in Saudi. That is a legendary moment, and we're very happy for Jahez and the investors and the founders, and we think there will be more in the region. Lola, if you wanna touch on any points, or Mohammed.
Yeah, I want Lola actually to join this, especially regarding the registrations and regulatories for syndicate funds. Is it actually also facing problems, or it's going flawless and it's not it doesn't have any problems?
Yeah, no, I think all of these points were super interesting, and I think this conversation only means that like the region is now in its like teenage years instead of its infancy years.
Yes.
But no, I think for us, we established our syndicate when there was no regulation about syndicates in the region, so it was completely like outside. Now we were seeing like more structures, ADGM making it like easier for syndicates. We're also seeing other global players just making it super easy for any syndicate from anywhere to be set up. So the global tech is evolving. I'm curious, and maybe this is like an ask for like the rest of the group. We're talking how the ecosystem is changing a lot, and I think Mr. Mohamed Fardan like had very good points, and Qusai as well. One thing that I personally think a lot about is that there's so many wins and so many records set in the past year, but it is not like it doesn't stop being true that like every ecosystem will have to go through its failures. So like the true test of VCs or funds or syndicates is how to like face those, which are gonna come, like independently and like inevitably. So the question for the crowd would be like, how do we do this? Do we do it mirroring the US and other more developed ecosystems, or do we just do it in the fashion of the region?
True. That's exactly. I mean, maybe now Mohamed Okasha can actually talk us more about this in Egypt scene, and how how this is actually progressing and impacting the whole scene and impacting the startups. Because like again, in the morning we have heard that the government is actually doing a lot of revamping and developing on the regulatory side. So how the things is happening?
Okay, allow me just to comment on the laws and regulations that allow you to set up a VC worldwide. Two things about that. I mean, the most important one that it is a global thing, so you can set up the VC wherever you want to. If it's not possible in Bahrain and Egypt and Saudi, you can do it in Dutch, you can do it in US, you can do it in Mauritius. So there is a different jurisdiction that offers you a place to set up a VC, and then you can invest wherever you want in as a region. I think, from my perspective, the only reason for you to set up in one way is the ease of setup. And the second thing is the nature of your LPs, because some of LPs require certain jurisdiction that is not possible for others. So if you want to have a certain LPs in your fund, you look for the jurisdiction that's suitable for them or most favorable for them. Back to Lola questions about the what's happening in the ecosystem. I think we cannot copy anybody. I mean, the region is witnessing a change that is not seen before. Nobody have been through this. Exactly, emphasis to teenagers. So it's completely new. The maturity is happening in a way that everybody in the ecosystem is participating. But I don't think we will be the Silicon Valley. And I don't think we will be like Africa. Not necessarily that we copy the Asian model as well. So, but we are learning, where all of us are learning. The most important for us as a VCs is to make sure that we invest our money wisely. So, because a lot of mistakes will have a damage on the whole ecosystem. A fewer mistakes will definitely encourage more money to come in this whole ecosystem. The exit is always easy if you have a good product. If you have a good company, a good performance, a good business, you will definitely have a way to exit. But if you have a mediocre setup, mediocre companies that looks nice, but there isn't enough meat, as they say, it will be difficult to have number of exits. So it is up to us as VCs to be as selective as possible. And whenever there is a bad performance, we have to kill it quickly, not just to give it enough time to grow and make the problem much bigger. And I think it's in the interest of the whole ecosystem.
Sounds great. Okay, Hasan, now I've actually heard that, syndicate funds are actually focusing on impact. And we know that, impact is not actually a very, sweet spot for VCs due to profitability and a lot of things. Do you see that right now enough VCs are actually in the scene to invest in impact startups? Because I've met a lot of impact startups who are actually doing great, but they lack funds.
Sure. I think the question of impact is going to be something that every VC fund and every private equity fund going forward is going to be asking themselves, because as LPs are being more sophisticated, they're starting to ask for things around ESG. So how are you measuring the environmental, social, and governance impact of your startups and your investments? And so that's becoming a requirement from LPs. So although impact in itself may not be something that VCs are looking at investing in directly, but every VC and every fund, I think within the next few years, will be asking those questions of what impact does my investment have on society, because the LPs will be asking them to do that. If you look at some of the new due diligence questionnaires that have been established by ILPA and a few others, there's a very big section on ESG and in that. So I think every VC will be asking going forward, what is the impact of this investment that we're making? I think, the question of there's not enough funding, I think that's probably a question for the whole region. I was looking at the data the other day. I was like, great, we're hitting $2 billion in funding this year for the whole MENA region, which is amazing. And then I go and I look at the schedule of how much funding goes into other markets, like that's the same amount of funding that went into Belgium. I was like, no one knows anything about Belgium. Like it's like what? Like we're celebrating, but we're still like, where are we? And this is we're a market of what, 18 different countries, and we're the amount of funding that's in our region is the same as a small country in Europe. Like we're still not there. So the question of Is there enough funding? I think there still isn't enough funding. I think we're starting to see some competitive things drive valuations in certain deals, but I still think that as a whole, the market is underfunded quite significantly at every stage of the market. I mean, there's a lot more competition in Series A than there ever used to be, but it's still in a lot of areas still there's still a lot more that needs to be done. In terms of impact in itself, I think for us, the way we look at it, we're investing in great companies. When we invest in a good company, and we're investing in a lot of good companies, so our whole thesis is around investing in 100 to 120 deals over a 3-year period. That allows economic opportunity. So from an impacted perspective, our investment thesis in itself provides significant impact. And then the second part of it is if we're investing and these companies start to grow, they start hiring. So there's always an impact component to every deal that we do as VCs. But I think, especially in an emerging market, that's always going to be the case. That's just like the standard. Like we're investing in things that didn't exist. And so there's hiring, there's economic empowerment, there's all this sort of things that happen there. But we'll invest in a deal that has an impact angle as long as it has a business angle. Like it will generate a return, it'll be sustainable. The issue that we've seen in the past when people were talking about social businesses and all these sort of things before it became impact was where's the sustainability? Because a lot of them were being run and generating income through grants, through charity, through things that were not sustainable business flows. I think that's changed. I think now we're seeing companies that have impact, that are generating real businesses or generating real income. And I think as a VC, we'll look at that. Like I don't think there's anyone that'll say, "Oh, I won't look at a deal because it has an impact angle." No, like we're sort of encouraged to look at deals because it has an impact angle now going forward. So, but yeah, that complaint of startups that, hey, there's not enough funding. Well, yeah, there's not enough funding. I agree with you. Like we still need 10 times more funding and funds in the region than we are at this point in time.
Perfect. Thank you so much. Now, Mr. Mohammed, I mean, we are actually running out of time. We have 1 minute. The question is, if I'm a startup right now, I'm in very early stages, I don't want to raise funds. What do you think should I do to know? To raise fund? What are the steps that I should take to raise fund? And we're actually started to getting a couple of questions. So please go ahead, and then we'll actually take the audience questions.
Maybe we should start taking the questions from the audience, but in my view, still I disagree with my colleagues here. Still, when I was talking about my first experience in 2007, it doesn't mean that's the only experience I was referring to in 2007. I said in 2007, I started the journey in the venture capitals and in the startups and the ecosystem. So maybe my English was not clear or I was not loud enough. Still, I think now taking investment as a fund and investing is still, I think that is a regulated exercise by central bank. And central bank, I don't know in Saudi if that's the case, but I know for sure in Bahrain, all investment related exercises, taking investments and putting investments, that's purely regulated by central bank. I don't think we are like in the US as it was mentioned, and some other regions where you can take investments and all that. Still talking about money and receiving money, even if today you collect money for charity in front of the mosque, by the way, if you collect 100 riyal in front of the mosque, that is regulated, isn't it? So it's not as easy as it sounds, maybe. We hope what we are trying to do, we are trying on what I'm saying we should improve the legislation. We should make it easier. The first question I think Walid when you asked me how the startup will reach the fund and how the fund will reach the startup. That is the whole exercise. So if I go back to Hasan and ask him, now you have a fund, how the startups will reach you and how you will reach the startups. What is the model and the methodology today that you are using and what is the ticket of the investments that we are talking about?
Sure, I'll answer that. Yeah. So for us, what we've done is we've tried to democratize access to us as a fund. Any startup anywhere can apply through our website, and we will respond to that startup within a 2-day period. And we will be able to respond to startups and get them an answer within yes or no, ideally within 2 weeks, but we're closer to 3 to 4 weeks right now. Where eventually we'll get to 2 weeks. So for us, it's very easy to apply. It's very easy to access me as well if anyone wants. I'm on LinkedIn, I'm on Twitter, I'm on whatever. So my whole job is to talk to founders and reach out and get these things. So I'm very accessible anytime, anywhere someone needs us. And also we've made it into a process so that we don't want anyone to send in an email and they don't get a response because it gets buried amongst all of our emails. So we ask everyone to apply through the website. It allows us to track every deal that comes in and make sure that we get a response to everyone. What we invest is we invest around $200,000 at seed stage. We support the startups from the earliest stages when they have product launched, maybe some customer usage, and then get them all the way, hopefully, to Series A. That's when I think the other sort of panelists are all investing around the same stage as well as I do.
So
guys,
that's how the startups should start, and that's how the startup should what they should look at. And there are some venture capitals or funds that they are specialized in seed funding, and some are specialized in round A or round B, or that's the way forward.
Yeah, I mean, so this is a question.
That's the answer. Finish.
Oh, perfect. So thank you so much, guys. I have actually one last question for Lola, and then because this panel is actually, I mean, I really love it. It's going super, and I love it, and it actually can take till the end of the day. But Lola, now we have a question. What about crowdfunding as a vehicle to to mobilize the global market into Middle East investments? What do you think?
I think it's totally an option, and I think it boils down back to education, right? Like a lot of people, throw the word crowdfunding like, oh yeah, it's gonna like solve all of our problems. But the reality is that you need to make sure that everyone that invests in that crowdfunding knows that that investment can go up like to zero. Which is what a lot of the like Republic and all these like platforms are working on. But definitely, it is definitely one of the channels, and we're still seeing a lot of consumer-facing startups raising also through crowdfunding.
Perfect. Thank you so much, guys. I really enjoyed it. It has been a pleasure to have you all in the panel today, and wishing you all the best. And please stay tuned. We're actually having great panels today.
Thank you. Bye, everyone.
Thank you all. Thank you.
Thank you. It was a great pleasure. Take care.
Thank you very much.
Thanks, everyone. What a great session. It was wonderful to hear about the fast-changing market of startup investment in the Middle East. And it was a very dynamic panel as well. So thank you to all the speakers. You kept it so lively. We now have a mindful break with a guided meditation. So tune back in just a few minutes to enjoy this time of calm and recharge.